RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief, our fastest 30 minutes, 20 minutes, wow, somewhere in that area. In the West. As you can see on the screen, it is 4 minutes past the top of the hour on the wet coast. 9 a.m. on Friday, 7th of June. So I hope you're enjoying your early, I guess we're still late spring, eh? Late spring, not quite into summer just yet. Suppose all the kids are happy, getting out of school soon. This is kind of a weird transition window for the market. Actually, Sonny was on the well, I guess he was in the lounge. I don't know whether he was on one of these broadcasts. We should probably have him on. It's not a bad idea. Maybe he would do like a 1-2 punch on Tuesdays. We'll have Sonny, who's joined our team as a portfolio manager, and he's a fund manager now himself. I talked lots about Sonny the other day on the Afterparty. But anyway, he put out in the lounge, and actually maybe I'll make a habit to show everybody on the broiler chickens. Maybe, Chris, you could do me a favor and just note for the broiler chickens, we should review Sonny's comment there the other day. And I think it was actually pretty pertinent. And the guy's pretty smart. He runs a fund now himself and seems to be doing pretty darn well. And he was pointing out that usually if in these pre-election years, actually Bitcoin seems to do fairly well. And actually generally risk itself seems to do generally pretty well here through the late spring, early summer, which I thought was interesting. It was an interesting statistical set that he was showing us. Of course, it was too far ago for me to scroll up here. I was hoping I could just see it, but oh well, too bad. We'll look at it maybe on the Broiler Chicken Show. So here we are. Today is Friday. Of course, today was a big jobs report number out of the US, and also, I don't know, it's crazy China to place. Also reported some data. It is interesting to see that China went and cut interest rates there the other day, which is going to probably lead to some more hyperinflationary pressure. But I think the politicians were just exerting so much pressure on the central banksters that they didn't really have a heck of a lot of choice. But anyway, that's here nor there. Europeans also cut interest rates. Suppose it's commentary too on how tough the economic times are there over in Europe, and theoretically the times, aside from China to issues, Canada should, on balance, just sort of ride the coattails of the Americans. But, there's a lot of, let's just call it conflicting trends within my poor country right now that have derailed that historical relationship. So we'll see how that plays out. I always do like to start off these videos with a look at the breadth indicator and really sort of TRI's proprietary tools. I think on balance, this actually is probably a pretty good summary of the current market state right now. Wow, isn't that weird? I'm getting weird screens over there on YouTube. Are we okay, Chris? Everything operating normally? Okay. So, if we look at the breadth indicator right now, this basically is kind of like, wow, just hurry up and do nothing. Not really overly bullish, not really overly bearish, kind of just middle of the road. And if anything, we look at the actual histogram, everything here is kind of just middle of the road. Interesting on the medium term basis, the bonds are getting a little bit oversold, but I don't know. Looking at the economic data right now, I wouldn't be surprised if we have at least a couple good weeks of some bond weakness here in the short term. But I think our just general summary here is, man, just slow and steady wins the race. It's interesting how crypto here, it's a little bit on the negative side, but it isn't sort of like, fall out of bed. The world, the sky is falling kind of reading. It's just sort of meh. So, there was a guy that I used to work with a million years ago. Actually, half of the reason why I think he built his little prop firm was to get sort of a barometer reading of is the market heavily on the long side or the short side. When I called him out one day about that, I was joking with the day traders this morning. Oh man, he did not like that. I was giving away all his secrets. But anyway, that's here nor there. Point I would just make here simply is, we're coming out of sort of that seasonal trough, dangerous scenario, the early May, sell in May and walk away, all that kind of talk. I think we're just going to sort of bump along here. And then we'll transition into the summer silly season, which isn't, it's actually a market that usually does fairly well. But unfortunately, it often sets us up for some sort of meltdown there in the fall because prices get bid up too much. But especially with regard to things like crypto, we're moving our way through that seasonal troughing. A lot of these altcoins and stuff have been washed out. There's been a lot of distraction in the market with these meme coins, and of course, that roaring kitties and all that kind of stuff that seems to have the public's attention. I actually even saw, I think it was Fjord said that he was talking with some hedge fund buddies of his, and they were, along the same lines. So we're working our way through this seasonal correction. And once we're through it in about a week or two, once we get through the month of June, man, get ready. There could be some serious parties happening here in crypto through this summer. So be prepared. I hope you all got your heart together, right? Like I've been saying over the years. If I understand correctly, I think right now this broadcast that we're doing right now is competing with the Roaring Kitties guy. He's got some sort of public broadcast going on. And, talk about it's funny with this stupid Roaring Kitties nonsense. I don't know how the heck I can show you this. I put together a graphic here this morning. This is almost hilarious. I had the order, my next sell order on this GME at 34. I don't know whether you can see that I just pulled up this paint document. You can see I had it at 34, and this would have been 60x Phil. And the goddamn market, it went all the way as high as 38. And I didn't get a fill, the bastards. Drive you crazy. That would have been nice to have been touting, hey, I just booked 60x on this stupid GME. But oh well. Maybe through the weekend, who knows? I get the impression that Mr. Roaring Kitties, whatever the hell his name is, has done fairly well with the story. I suppose we'll get to that after we get through all the other stuff that we should talk about first. But as you can see on the list, we'll look at that GME finishing off the video here today for you. So market's kind of nah. I don't really think it's a rip roaring buy or a rip roaring sell. It's kind of just sort of sitting middle of the road. And there's a lot of things that were actually very problematic up here that are being resolved. So, that's half of what I'd like to try and show you today. There's so much to show you, and I've already burned through almost 10 minutes of this half hour. So let's get on with it. So, there's your big stock market move. Got the Dow up a whopping 0.1%. NASDAQ even doing less than that. Actually, beg pardon, now up 0.2%. And there's the sum of it all, the S&P 500, which is kind of a mix of what does Julian like to call them? Legacy, no, boomer, I guess, boomer market, and then the tech savvy millennial market. Put it all together, and the S&P 500 is kind of like a mix of both. So, what's driving the market specifically today, news-wise? As we said, today was a big jobs report day. So, the numbers that came out, non-farm payrolls, 272,000, which was quite a bit more than expectations. Interesting thing about this, though, is if you actually look at who's getting jobs and who isn't and all that kind of stuff, government seemed to add quite a few jobs here, twice as much as expectations. And a lot of jobs being added to the service industry. And if I'm not mistaken, I think a lot of the jobs were basically part-time jobs that were added, not full-time jobs. I guess you can see it here in China. Look how bad the situation is in China. So it's like, and I would imagine that probably a lot of that are very similar situation down in the States. So as the baby boomers, of course, age and they've got all the money, they're sitting on basically their treasuries and probably stock portfolios and real estate portfolios and just collecting rents and just riding out retirement on the golf course. The broader like industrial base economy is unwinding, and if anything, I heard that China is ramping up exports again. So are we heading right back into that economic situation that we had there for the past 5-10 years, where in essence our North American economy is just slowly deteriorating, and the jobs that are being created are all these like Mick jobs, like fucking working at Walmart or service industry, part-time, no benefits. So the headline, of course, is big fat. Look at that! Look at all the jobs we're making. Oh, we're gonna do awesome. But are they actually real jobs or are they just garbage jobs? I have a feeling it's more the latter than the former. Inside this, of course, we have some interesting data points with regard to inflation. Average hourly earnings year over year coming in at 4.1%, and that was actually higher than expectations. So you can't make the argument that the Fed has any justification for lowering interest rates. Jobs numbers themselves coming in much stronger than expected, and the actual wage pressure is still very, very strong. There's nowhere. This is going the opposite direction of what all these inflation hawks. Although you've heard me talk lots about what the real agenda of the bankster crooks is. But the point here is that if they actually are in the business of trying to control inflation, there's no way they can lower interest rates in the face of that. So big fat number there. Interesting too to see. I actually like, and I was commenting this morning in the day trader room. I really like following this unemployment rate of the sort of the entire employable body. Those people that have actually left this sort of job pool. Keep in mind that this unemployment rate that you see here, this is a highly, highly finessed number, and I don't even think it's really real. I think this is probably more your real unemployment numbers. Interesting too, historically, usually the Canadian unemployment rate is about 50% or so higher than the Americans. So I don't actually believe that this is a real number. This is more of these sort of, finessed, crooked, if you will, government statistics to try and sort of justify, not paying out pensions and keeping them indexed to real inflation rates and stuff like that. So, but it is interesting to see that both the US number 4% here and the China D's number 6.2% here, they're both actually ticking up and not going the direction that you'd really like to see these things head. Having said that, ironically enough, this is kind of what the Fed wants, but at the same time, too, more jobs being created and more job wage inflation. Man, there's a bunch of mixed messages in this report here today. So it's not really like it's really good news. It's not like it's really bad news. It's kind of like it's just same old, same old. So as a result, you've got the stock market up like what an eighth of a percent there on the Dow. Yeah, call it an eighth, maybe a seventh of a percent there on the S&Ps. Interesting that tech stocks are actually floundering in the Russell 2000, the broader market. This is 2000 stocks, actually slightly down on the day. So I don't think you're going to get a lot out of the indexes. I also say too, and it's interesting that we do these reports on Fridays, because I think to a certain degree that these markets are highly finessed on the day before options expiry. And in the after party, I've got this all ready to go. We'll go and take a look at the options expiry and see what crookery is all involved in there. But my hunch is it's just business as usual. And you're going to find that mysteriously the market's going to go out just slightly above or just slightly below a significant options expiry strike. So Wall Street wins again. And of course, they can provide or afford the hookers and blow for the Hamptons this weekend. I guess the only thing that I would just leave off with looking at this sort of the broader market is I always like to look at sort of the big picture. What do we see here? US dollar obviously on that event caught a huge bid because I think clearly as I said, the Europeans, the China Ds. I would imagine if Russia was even part of this world anymore, although what I'm actually hearing Russian scholars themselves saying it's quite shocking to watch Russia itself as a country is literally committing suicide right in front of the world's eyes. So people within Russia are actually saying that. So can't even really use Russian as a commodity proxy anymore because it's just such a train wreck. But it's basically going the same route that these commodity countries are going. Be interesting to see how Australia does through all this because China's trying to catch a bid, but at the same time, too, China has been kind of a dick to Australia over the past 5-10 years, and their relationship has really fallen apart. I wonder if Australia is still sort of the commodity supplier to China. Anyway, we'll see how that plays out. Did hear also too yesterday, I thought it was interesting. I heard a conversation that China is actually openly talking about nuking Japan because they're planning on invading Taiwan here. And if Japan does decide to do anything, the scuttlebutt is that China's ready to nuke Japan. So there you go. Hey, talk about ratcheting up the temperature. Anyway, so you can clearly see the market is expecting, you know, the bid for the US paper should remain, which means that the bid for the US dollar should remain. Euro, they're running out of there like a son of a gun because they cut rates yesterday. Usually, when the initial cut, there's more to come, and you don't cut rates if you actually think that the economy is strong. You only cut rates when you really think that the economy desperately needs some help. So Americans, no need to think about that situation there, but everywhere around, there's Australia, what I talked about a moment ago. There's Canada, even Swiss, being basically a gold proxy now, getting smoked. It was interesting. The knee-jerk reaction in the market was to the sell side, but you can see slowly but surely they're bringing the Dow came screaming back here. They're trying desperately to bring it back. Russell 2000 still on its knees. Probably the Russell 2000, a lot of those sort of zombie companies that are just surviving, they're not doing well because, oh boy, you can see the bond market just got absolutely smashed here today. And then finally, I suppose that brings us to good old crypto. It's kind of a bummer, I suppose, but this is a trader's life. It's the way it goes. Did take a couple short shots against these highs. Good old Linda Bradford Rajke. Take 2 shots. If after 2 shots the market tells you you're wrong 2 times in a row, maybe just leave it alone. So I'm not going to do anything more here for the time being. So that's a futures market. What I did find interesting was that the cash market did not break out. So our cash market shorts, they're still working. Look how close it came. So this is still working. I mean, look how damn close that came to getting stopped out. Absolutely remarkable. And if it goes up through the highs, okay, fine, get stopped out. So, I had told the community that I was risking against this high on the cash market and the futures. Futures did take out that high, but the cash market here, it ran up, it busted this happy face, but then it started to melt back down. I have no idea what's going to happen here. Live by the sword, die by the sword. Yeah, if we get stopped, we get stopped. That's the way it goes. One thing I did notice looking at the total, we're just sort of parked right up top here. We haven't really broken out to the upside. We still got a lot of traffic ahead of us. We haven't really put in a W on the other side of this trend line. Julian yesterday was making reference that he thought that we probably need to have another pullback here before we can really get this thing going in earnest. I don't know. I mean, I'm just humming it on. If anything, and this has been the message that I've been saying to everybody recently, I think it has everything to do with which way this thing breaks. So this is the Ethereum. It had I drew these lines about a week or so ago and just said, look at if we M out, then obviously we're heading back down. If we W out, then we're heading back up. You can see there's a cute little W inside here working away. And really, I think I probably just have to wait till either of these levels are taken out to actually get any kind of clear directional signal. So, crypto's just sort of sitting there. Having said that, and this has been my message to all of you all along here, I see slowly but surely these names, especially like Sjord's good fundamental quality names. I was barking to you guys at length over this hello when it was down here at 2 cents. It already jumped up to 4. So ironically enough, had you bought at 2, you could already sell half on a double and get yourself a risk-free trade. I'd like to sneak my way in here and on whatever the pullback is here against these lows over the next week or two. If we're lucky, we should get some sort of consolidation in here. That's where I think I'm going to try and sneak my way in. I was touting to all of you this flux. I even tweeted out images and stuff about how much I like this chart. So you can see it's slowly working its way up. Look at good old Zoogs FXS. Look at that. Frax. Jesus, that chart looks good. So he's looking extremely buyable in here. And you can kind of see the bases all starting to slowly come in here through this month. I think what I'll do in the after party is go through these. I won't spend a lot of time on this right now, but bottom line here is, we've been talking about this ad nauseum. Your job was supposed to not get sucked into that euphoria of like March, April. Remember when the market was just absolutely stupid there? Most of these names got really knocked down hard, which is interesting because it does mean that the broader crypto market is cleaning itself up and they're just slowly going in and putting in bases here. So, if you have your capital ready, if you have your plan ready, if you're you're here to make money trading short coins through the summer, well, get ready. I mean, everything's falling into place. You just got to pull the trigger on whatever it is that you're interested in and live with the results. And the good part about this kind of market now is we're starting to get into the window where the little old ladies can start nibbling away here and start building positions for this summer silly season. So I suppose that's a good thing. I do agree with Julian though, his comment yesterday. And if it feels like this bottom would be too easy if it came in right here, but that's just my opinion. Opinions are like those things at the bottom of your body. Everybody has some, and sometimes they stink. All right. Anyway, let's see. What else am I supposed to talk about here? Topics of the day. I guess we'll finish up with just a quick talk about that. Obviously, good old GameStop. What I think I showed you earlier. I mean, talk about piss off. I would have got booked a 60x on this thing. Next stop would have been 120x. But anyway, I still have the order working, so I'm not in a big hurry to do anything here. But I was a little choked when I woke up this morning and saw that I didn't get a fill there, the bastards. But anyway, that's DeFi for you. It's a little tricky playing in this space. And if I understand correctly, that the powers that be, and you want to know who the powers that be are, just remember this guy. I think this guy, it's so important to remember. Actually, I don't even know if I put him in here or not. I might have put him in a different room, but let's see. Do I have him in here? Oh, darling. Oh, fudge. This probably isn't going to work. I don't have it. Oh, well, anyway, I heard that somebody said that there are algorithms and bots and shit that crank these things up and totally manipulate the market. Just get used to it. This is an unregulated market space, so it really shouldn't surprise anybody. In fact, that Gensler guy, his interview with that Kramer guy, that was hilarious. But this jerk, yeah, this jerk. Everybody's got to remember this jerk, right? We all have to remember him, right? And if you don't know the story, Dan Friedberg, part of that FTX debacle, and more importantly, what did he do in his online poker business? That was just an absolute dick move. Um, so it doesn't surprise me. And, there is no evidence that it was him in particular, but it's people like that are involved in this space that are running these bots that totally screw up all of this and print these insane charts just to try and screw with the public. For instance, that Luna story, on balance, on paper, I mean, Novogratz, Jesus, he was loaded up to the tits in that damn thing. A good quality name, but somebody wanted to kill Do Kwon and his story. It's clearly obvious. Um, and so, unregulated space, it was these jerks that went after Do Kwon. And remember how he had to print coins to save the Luna network and stuff like that. And then to try and save the network, he printed like trillions of coins that, of course, just blew the whole thing up. Um, they knew how to destroy Luna, and they did it. And I would argue these same characters are at work in DeFi trying to undermine the whole ecosystem. So just understand that this is part of this game. If this is the regulated futures industry, if I had this order working at 3.4 and I could go to the regulator and show them on the futures market that it traded 3.8, I'd be guaranteed a fill. So I guess the point just being, you just have to understand that this is part of this DeFi game. It kind of sucks, but anyway, it is what it is. You can see what's happening here. If I understand correctly, he's supposed to be having his broadcast with his 100,000 viewers on Twitter or whatever. And if anything, you know what this reminds me of? I hate to say it, but this totally reminds me of and the only way to describe it is to use one word, but you can't use it because it's the F bomb. But hacking, 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 hacking. Who am I talking about? Hacking, hacking, hacking. Everybody should know exactly who I'm talking about. And this is exactly what happened last time in this crypto nutso insano market state. So, I mean, I don't know whether this is crypto specific. It's obviously more stock market. Yeah, very good Glass Insights. You remembered. So, anyway, I'm a little choked. I didn't get my fill there, the bastards. Interesting how they have a little bit of a gap to the upside here, though, still on this candlestick chart. So, if I'm lucky, we get another push up top here and they give me my 60x fill. Let's see. Also, too, thought it was interesting. Nvidia, talk about insanity. Talk about great reset. I mean, $1,200 for this damn stock. This is ridiculous. But more importantly, they're going to roll the stock, or they're going to split the stock 10 for 1, which will mean that there will be a nice a nice friendly 24 billion shares out. This is ridiculous. What's going on in this world? And look at these fundamentals. They're just insane. Don't you remember when Allen stock was trading at these stupid fundamental valuations? Keep in mind, Allen stock is like a quarter of what it was at its peak. And it was trading at these just stupid, insane fundamental valuation levels. I look at this and I go, damn smart, Mr. Stanley Druckenmiller. You don't want to be long this. This is insanity. And this is exactly the way that damn Tesla looked at the when it was like $400 or $500 a share, and then, now it's $100 a share. So I mean, this is just absolute stupidity. For whatever it's worth, whenever I'm value hunting stocks, I look for stocks that are trading at or below book value, not 59 times book. This is nuts. The book value per share on this thing is $19 a share. This is nuts. Oh, God, crazy world. So, I don't know. I mean, you can listen to an old timer like me, but this is just nuts. Anyway, it was a topic in the news. I thought I'd just mention it. I still think, we had talked about this GameStop the other day, and I had said, TRIers have no business coming in on the buy side anywhere in year. We are supposed to be buying off of this W down here and booking your 30Xs, your 60Xs into this stupidity. You're not supposed to be buying this. And if you buy this here, look at this insane volatility. These, gaps need to be filled in. Look at there's a juicy gap there at what, $18? There's no reason why that can't get filled in. And what's interesting too, we had mentioned this. I don't know if anybody's going to listen to that Roaring Kitties guy, but at $34 a share, if I understand correctly, he's got like $20 calls. He is going to be auto exercised on those calls if he doesn't sell them. Maybe half the reason why this is down so hard today is he's just market selling. Who knows? But yeah, I honestly, with 35 years market experience, I really don't think it's in your best interest to come in here and play in this arena here. You could lose a lot of money really, really quickly. But anyway, it is what it is. Interesting side note. Not really relevant to anything that I'm doing in the market today, but it is part of sort of the news. You see how the US dollar is jumping up dramatically here. We have been talking about what are we supposed to think if we ever see the silver market smiling at us? I did have a pretty substantial counter trend rally yesterday, which is interesting on the silver itself, because you can see all that did was it just filled in a gap that needed filling. Remember, I showed you those GameStop gaps. So there's a good example. And now this is actually going to potentially make an outside downside key reversal bar here. Hugely bearish. I mean, stunningly bearish. I've said repeatedly, I like silver, but I like silver in the reload zones against market structure trend lines, against previous lows. Fill in these gaps. I certainly don't like buying silver, especially if you see the market smiling at you. I like buying silver at Fuggenbaum levels, right? How many reasons can you justify taking a trade down here, but not up here? So not really a big surprise to see what's going on here. And also too, the silver market's stunningly corrupt. So be careful there, folks. But what was interesting was the headline here, and I don't know, a lot of times you see price action and then the media has to try and figure out a story to match why the price action is happening. But it is interesting to see that actually this is this the article that we were talking about? Oh, yeah, I guess this was it. Gold was already trending lower after data unveiled. The PBOC reserved showed no change in May compared to April. So I think, and Chris, is this the article that you were referring to, that China was not buying gold anymore? All right, so there you go. Gold price deflates after People's Bank of China halts further buying. So I might make the argument that, this whole metals market was extremely dangerous anyway. And if we use the silver market as a proxy. And if you look at things like gold and silver stocks, right? There's the gold and silver sector. Probably not a good idea to come in too hard on the buy side up there. You see where reload zones are. Actually have bearish divergence in MACD. You can see I didn't quite get a stupid reading, but you can see RSI and Willie are kind of rolling over here. So it wouldn't surprise me to see gold and silver stocks work their way back down here. And keep in mind, I got lots of bids on these gold and silver stocks down below. I do like the idea of buying into that space. I just don't like the idea of chasing, you know me. Um, so it is an interesting sort of what is the fundamental reason why the gold market is coming off as hard as it is? Why the silver market's coming off as hard as it is? Why does this big silver M staring us in the face imply that we're probably going to see prices coming down? Well, I guess the scuttlebutt is, well, China's not buying gold and silver. It was interesting as price was running up here. I do remember like looking over on the YouTube page and people going, oh, but China's buying gold like crazy. You got to buy it. You got to buy it because China's buying it. I don't know. If anything, I often say this is that if you actually look at the price action itself in the marketplace, big fat smiles, well, that's often a message that the market is actually trying to speak to us and it's trying to tell us something. And then you find out after the fact, well, it turns out Chinese are not buying anymore, blah, 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 blah. So anyway, interesting sort of reason why you see such weakness in the gold and silver market right now. I would make the argument that, we are theoretically in a, 17 and a half year US dollar bull market. I did rant at quite length the other day about this on the site, and I still feel 100% confident that the United States of America is really the only place in the world that you really should be invested in right now. I suppose you could argue, US puppets like Israel, obviously they're going to do well with all the free money that they get from American taxpayers. But other than that, I wouldn't be overly bullish about Europe. I certainly wouldn't be bullish of the commodity countries. I really wouldn't be bullish of South and Central America. If I understand correctly, that guy in Argentina is in pretty big trouble. The Argentina currency is collapsing. And really, most of my net worth is actually in US dollars. I'm just sitting there collecting interest, and I wouldn't even be surprised if the Americans have to further raise interest rates down the road. So, all right, there's your report. Hopefully, I covered everything that was on our little to-do list. Was there anything that I missed? China, Nvidia, GameStop, Bitcoin. Actually, I got to say, Bitcoin and crypto isn't looking too bad in here, we looked at the broader markets, we looked at the jobs data, and we looked at the breadth. Yeah. Okay. Why don't we leave it at that? Have yourselves a great day. Oh, it took me about 5 minutes more than I wanted to. But let's pop on over and go look at some of these altcoins in earnest, in detail, and talk a little bit about what the weekend and maybe what we'll even do is we got to get Steven on these Friday calls to set us up for what the hell should we be watching for coming into the weekend? Because get ready, it's time to party in Decentraland. And actually, I did notice that the meme coin of my idiot leader here is catching a bit of a bid. Maybe that's the one we should be watching here. All right, everybody, have yourselves a great day. PMA for the win. Slow and steady wins the race. Remember what your number one job is. Don't take what no winner goes. And the only liberty is bye.